Thank you, Brendan. And if I'm trading Palantir, then you know it must be Palantir earnings. Now, obviously, I know this is Sean's baby. You came in. Earnings were not that bad, realistically, but at the end of the day, when you're not making money, these valuations have been driving the market. So they were under pressure, down 10% in the pre-market at one point. So it comes down to this. Can you find shortable levels you like if you want to play with the trend, or do you have a level that you want to defend? And it was pretty plain and simple. I have a 60-minute chart up just so you can see a better look going back into late Jan of this $12 level. And the key thing about that 12 is you didn't really have a hard bottom down there. Like, you broke this a couple of times, got lower by 10, 15 cents, and then snapped back up. It's the rejection from that level that we're concerned with. And you go back, make that fresh high, you then bounce in front of that level again and come back and retest some of those highs. So going into today, there was only one look I was going for. However, you always have to think about the counterparty to the trade. When a stock is down and the trend is down and the market is going to the downside, everyone's feeling those shorts, right? As a matter of fact, I even like to short at 12. But you always should be afraid of short bottom fail break, something we talk about all the time. And that is, it goes down, makes the initial break, so you grab 99s or 98s on a $12 break. It tries to make that initial push. In this case, we know on the daily, it has not been going past that 1185-ish mark. Does not break through, and then barcodes. And we actually said on the live show, as this was happening, was in the short, didn't go, immediately out, didn't want to get trapped. If this does not make a fresh low and breaks out at 1205, it's a long. It's trap shorts at the bottom that were too stubborn to get out, and then you just grab the long trade. Now, in this particular case, because of the nature of that trade, it's a tight stop, it's at a key level, it's a very liquid name. You can size up and do a scalp trade. But once it passes about 1225 or so, it then just turns into a bit of a hold. And at that point, I'm thinking about establishing how far it can go. I knew from going back into some of these charts, okay, we had a level at about 1260. It made a bit of a low there. And then we had another one at 1275. Just sort of resistance areas that could, support that could turn into resistance areas on the way to the upside. And that's probably most of the reason why we're taking shares out at 50 and then holding on and then trying to get out at 40 and then 60 up at that top again. So I did think we were going to continue this move, held on to a portion, said, look, give me that 1275, 1280 in front of 13 or bust. We're going all the way back down with that last 10%. In this particular case, you're seeing the market slide to the downside. But if you're willing to hold when you got that low of the day, I believe trying to get that home run on the last portion of the trade makes a heck of a lot of sense. Those wipeout type bottoms are some of the best trades you can get from a risk to reward standpoint. But you need a few things to line up. It's got to be a trend down. It's got to be a stock that people are looking to go short. It's got to be a level that people are keyed in on that they want to punch. And you need that liquidity there. And then once the shorts are trapped, you've got your long. It's a defined out to me because once that bottom is taken out, that's your risk level. You can't then hold on to it if it breaks that low. That's the key thing about going with that counter trend trade. So don't always trade Palantir. This time it was just too juicy of a setup at that $12 level.